Marketing services to build, sustain, and measure consumer conversations about your products and services.
How low can they go? Traders on the NYMEX send oil prices plummeting again. The cost of crude is now at its lowest level since June of 2005, and many industry observers think it'll stay there.
Delta's becoming the belle of the airline ball these days. Now it looks like there's a second suitor waiting in the wings that wants to plan a partnership. We'll tell you who it is.
Keeping things moving. That's what companies like UPS do. Some experts say it could keep your portfolio moving forward, too, as a place that's best to invest.
And our street critique guest tonight says look for big oil companies to get even bigger. She's Hillary Kramer, personal finance editor at AOL.
I'm Paul Kangas.
And I'm Susie Garoff. This is Nightly Business Report for Wednesday, January 10th.
Nightly Business Report is made possible by
Is your nest egg in shape for retirement? Objective financial advice can help. A.G. Edwards, for more than 118 years, fully invested in our clients.
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments, gain from our perspective.
This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Good evening, everyone. Crude prices slid today to their lowest level in 19 months. In New York trading, February crude futures fell $1.62 to $54.02 a barrel. Oil prices have now tumbled 11.5% since the start of the year. Today's sell-off was sparked by a government report showing a big buildup of supplies of heating oil. Suzanne Pratt reports.
Winter is finally making its presence known in the Northeast, but its delayed arrival continues to weigh heavily on oil prices. Crude at the New York Merc sold off sharply again today, closing just above $54 a barrel. The selling came after data showed a much bigger than expected increase in distillate supplies, up 5.4 million barrels. In addition, gasoline inventories rose by 3.8 million barrels. There was a surprisingly big drop in crude supplies, but traders say that drawdown did little to support prices because the level of available crude is still higher than normal for this time of year. Experts credit mild temperatures in much of the U.S. for the large stockpiles of distillate, which is used to make heating oil. Man Financial oil trader Bill Wallace is betting energy supplies will outstrip demand this winter, no matter what happens with Mother Nature.
We're about a third of the way, a little better, a third of the way through the heating season. So even if you had a cold snap in the second half of the month into February, it's not going to really be enough to let the market off the hook because there's so much inventory.
In addition, OPEC's production cuts seem to be having little effect on supply. Last November, the cartel announced it would cut oil output by 1.2 million barrels a day, and it plans to cut another 500,000 barrels beginning February 1st. But analysts don't think much oil is actually coming off the market. Experts say hedge fund selling is also accelerating oil price declines. There are reports that several major funds have been unloading their oil positions, fearful that oil prices will fall further. Oppenheimer analyst Fadel Gate says excessive speculation is what drove crude to $80 a barrel last summer.
Most of the speculation came out of the price over the last 6 months. But having said that, there is at least $10 a barrel of fear premium embedded in oil prices right now.
Gate predicts oil prices will be even lower this year than they were last year. He expects crude will remain in the mid-50s and fall even further in 2008. Suzanne Pratt, Nightly Business Report, New York.
The U.S. trade deficit with the rest of the world narrowed unexpectedly in November. Exports hit a new record as imports increased much less than anticipated. The Commerce Department says the trade gap shrank by 1% to $58.2 billion. Most economists had expected the deficit to widen. It's the third consecutive monthly decline in the trade gap, which some experts believe has now peaked. Kathleen Stephenson of Credit Suisse thinks the data is bullish for manufacturing.
Despite the fears of globalization, despite the fears of outsourcing, etc., one point is that if you have, particularly in real terms, double-digit growth rate in exports, it does mean that America remains extraordinarily competitive.
Despite that trade news, Wall Street headed lower this morning after Chevron issued a profit warning due to falling oil prices. At midday, the Dow was off 36 points, the Nasdaq down 3. Stocks rallied on reassuring comments about the economy from Chicago Fed President Moscow, with gains in Alcoa and Apple helping lift the market to a positive close. The Dow Industrial Average gained 25.56 points, ending at 12,442.16. Nasdaq Composite rose exactly 15.5 points to 2459.33, while the Standard & Poor's 500 index was up 2.74 at 1414.85. Over in the bond market, the 10-year note fell 7/30 seconds to 99 and 16/30 seconds, lifting the yield to 4.69%.
Looks like everyone wants to do a deal with Delta Airlines. Nightly Business Report has learned Northwest Airlines is now in advanced talks with Delta about a potential hookup after both carriers emerged from bankruptcy. That comes as U.S. Airways upped the ante today in its bid to take over Delta, boosting its offer to more than $10 billion in cash and stock. Delta's board will review that revised offer, but Delta's concerned the financials of the deal would increase its debt burden by another $1 billion. The new U.S. Air bid expires February 1st, just 6 days before Delta's management presents its own reorganization plan to the bankruptcy court. U.S. Airways says a merger between it and Delta, keeping the Delta's name, offers creditors more value.
Congress gave low-wage workers a financial boost today. The House voted to gradually raise the minimum wage by $2.10 to $7.25 an hour. It's the first hike in 10 years. That's the longest stretch without an increase since the minimum wage was established in 1938. California Representative George Miller, who introduced the measure, says it sets the tone for the new Congress.
Raising the minimum wage is an important first step for the Congress in its efforts to stand up for middle class and to stem the middle class squeeze. This raise will make a real and critical difference to millions of people's lives.
President Bush supports a wage boost, but only when combined with relief for small businesses. The bill the House passed today does not include that. A similar bill is in the works in the Senate, where Republican leaders hope they can tack on what the president wants.
Also from Washington, President Bush is unveiling a retooled strategy for the war in Iraq in a nationwide speech tonight. The president's expected to outline plans to add more than 20,000 troops to the more than 130,000 already there. Stephanie Dew looks at how the new strategy could impact the defense industry.
$400 billion has already been spent to fund the global war on terror. The president is expected to seek an additional $100 billion to continue funding the war effort and boost troop levels. Defense analyst Lauren Thompson says demand for military equipment and services will be strong.
From an investment point of view, the surge of forces into Iraq signals that there is not going to be any near-term reduction in the outlays for munitions, for battlefield services, for logistics, and all the other things that many of the big companies provide to the military.
Democrats are opposed to increasing the number of troops in Iraq. After meeting with the president this afternoon, House Speaker Nancy Pelosi said the people have lost confidence in the president's policy.
We will give his proposal a fair hearing, and in our hearings we will establish the ground truth of what is happening in Iraq, and then we will vote on the president's proposal.
Lawmakers can do more than voice their displeasure with the president's plan. With their power of the purse, they could withhold additional funding for the Iraq effort. That would force the administration to pay for ongoing operations with existing military funds. Defense analyst Brett Lambert says in that scenario, prime contractors like Lockheed Martin and Boeing would get squeezed.
So the top line may not decrease, but since we're going to be spending more on the operation for the next 12 to 18 months, you're likely to see trade-offs in the larger, longer-term programs, things like F-22, JSF, major shipbuilding programs.
The president will also seek $1 billion to aid Iraq in its reconstruction. But with $20 billion already spent on that effort, analysts say any new reconstruction money is also certain to get a high level of congressional scrutiny. Stephanie Dew, Nightly Business Report, Washington.
Tonight, we continue our annual look at the sectors poised to outperform the broader market this year. From trucking and logistics to engineering and manufacturing, analysts see potential for big gains in the highly diversified industrial sector. As our series Where Best to Invest continues, Diane Estabrook looks at the outlook for industrials.
2007 should be a good but not great year for the U.S. economy. That is why Sam Stovall, chief investment strategist for Standard & Poor's Equity Research, is betting on select pockets of the industrial sector.
Construction and engineering should do well as we continue to see an increase in non-residential construction. Our opinion is that this economic growth is likely to be investment-led or more business-led rather than consumer-led, as it was over the past couple of years.
The industrial sector comprises a broad range of industries, from manufacturing to construction to distribution and aerospace. U.S. industrial stocks typically perform best when the U.S. economy is firing on all cylinders. Still, there is a lot of uncertainty over the U.S. economy this year. Many analysts can't agree on the direction of oil prices. There's also uncertainty over the direction of interest rates and the U.S. dollar. So many experts are selecting industrial stocks that can perform well in any economic environment. Logistics and transportation companies are top picks for Morningstar's Director of Stock Analysis, Patrick Dorsey. He likes Expeditors International, Forward Air, and United Parcel Service. Dorsey thinks these companies, which move goods inside and outside the U.S., will perform well no matter how the dollar performs against other currencies.
The only trend that has to stay into place is that global trade increases. And in manufacturing and goods and services continue to be done further away from where they're actually consumed.
Dorsey also likes the highly fragmented industrial distribution industry. His top picks there are Fastenal and MSC Industrial Direct.
These are companies that distribute the little parts, whether it's fasteners or welding supplies, that help industrial America go. Not just large factories, but the smaller machine shops that really make up the heartland of industrial America.
Companies that provide packaging or receptacles for those little parts are top picks of Christopher Manuel, packaging analyst for KeyBank Capital Markets. Manuel likes glass manufacturer Owens, Illinois, and the more diversified plastics manufacturer Myers Industries. His firm expects to receive investment banking business from both firms in the coming months.
We've studied these back through several economic cycles, and when we compare our KeyBank Capital Markets packaging index with performance of the S&P and other indices, what we found is that the packaging stocks tend to outperform 3 to 6 months ahead of a recession and then continue outperformance 7 to 14 months out of it.
Industry watchers think U.S. stock markets could be volatile in the first months of this year. Both Dorsey and Manuel say the companies they pick can weather that volatility and perform even better as the year progresses. Diane Estabrook, Nightly Business Report, Chicago.
Tomorrow, our Where Best to Invest series looks at opportunities in the technology sector.
The New York Stock Exchange is booking a passage to India. The exchange is buying a 5% stake in India's largest stock market, the National Stock Exchange, for $115 million. 3 other investors, including Goldman Sachs, will also buy similar stakes. Indian regulations prohibit any one investor from holding more than 5% of its exchanges. The big board says owning part of the Mumbai-based market will help create value for its own shareholders, as well as opening up investment opportunities in India. India's stock market has been one of the best performing in the world in the last few years. Paul?
And there are 10 Indian companies now listed on the NYSE, Susie, with a market cap of about $76 billion. Now let's take a look at our stocks in the news tonight. Once again, topping the active list on the big board on 28.3 million shares today. Sprint Nextel moving up 40 cents after dropping over $2 yesterday on the company's forecast of flat 2007 revenues. It also yesterday got downgrades from Deutsche Bank and Credit Suisse. Then came ExxonMobil, reflecting the lower oil prices, down $1.10. Pfizer moved up 3 cents. The company is considering, according to reports, an over-the-counter form of Viagra. EMC, a 20-cent gain there. Motorola dropped a dime, fifth in volume. ConocoPhillips, another weak oil, down nearly $2 there. AT&T, a 9-cent gainer. Ford Motor down 6 cents. Corning moved up a $0.50. And Alcoa, 10th in volume, was up $1.71 after the close yesterday. As we reported, the big aluminum manufacturer reported fourth quarter earnings 74 cents, 9 cents above the street consensus. And speaking of aluminums, international aluminum up $2.10. Genstar Capital affiliate is going to acquire this company for $53 a share in cash. Elsewhere, Chevron, one of those weak oil, down $1.22 after the close yesterday. Chevron said fourth quarter earnings will fall below the third quarter level because of the drop in oil prices. AMR, the airlines were strong on the weak oil prices, $2 gain there after Callion Securities upgraded it from add to buy, and Callion also upgraded some other carriers the same way from add to buy, including Continental, United Airlines, and U.S. Airways, all nice gainers today. Nacional Telefonos of Venezuela, up $1.80. That stock plunged $6.70 yesterday on Venezuela's plan to nationalize the telecom industry. It rebounded today after Venezuela ruled out confiscation and said shareholders could be compensated. That's could be compensated. Volt Information Sciences up $6.62 on top of a $6.55 gain yesterday when the company reported fourth quarter earnings of 86 cents a share, 24 cents better than the Wall Street estimate. Intercontinental Exchange rising $10.60. The company's futures unit set a volume record for the second straight session yesterday. They're doing big business there. Oxford Industries, the apparel marketer, down $6.46. Second quarter earnings 68, up from 57, but a penny below the street estimate. And the company cut this year's estimate from as high as $3.45 in earnings to as low as $3. NASDAQ's most active, Apple Computer, up $4.43 at a record high due to iPhone fever. Google up $3.96. Research in Motion, which plunged over 11 yesterday on the threat of competition from the iPhone, up $4.10 today. Some analysts believe that the company's BlackBerry addicts are not likely to jump ship that easily. Intel, 49-cent gain there. Microsoft was down 30 cents, fifth in dollar volume. Cisco, 21-cent gainer. Yahoo up $1.12. Sun Microsystem, 27-cent gain there, but Broadcom was down 97 cents. And Sears Holdings up $5.86. The company sees fourth quarter earnings topping the Wall Street estimate by as much as 53 cents a share. And finally, shares in Ocean Biochem jumped a hefty 179% on news that its cleaning and polishing products will be available in 2,700 Walmart stores. Tonight's Street Critique guest says that while the big decline in oil prices may feel like a buying opportunity for energy stocks, she thinks it may be a buying opportunity of a different kind. She's Hillary Kramer, market strategist and personal finance editor at AOL. And Hillary, great to see you again.
Thank you, Paul.
The steep drop in oil prices seems to be good for the economy, but not so great for the stock market up to this point. What kind of buying opportunities are you seeing?
The buying opportunity in energy now is the consolidation that will take place. We've seen such a run-up for the past 18 months in energy stocks. Companies like Hess, HES, are out there and are going to be plays for the bigger oil companies that finally can come in and buy these smaller companies.
So a lot of takeover targets out there.
Absolutely. As well in the oil service companies like BJ's, the other oil service and extraction companies like Lone Star, LSS, all of them have become so cheap and are so nicely cash flow positive that they're consolidation for big oil companies and also those private equity companies that are looking for cash cows.
As an energy group taking it as a whole, what would signal to you that the bottom has arrived?
When we finally have to hit a bottom, what we have right now is volatility. And as long as we have volatility, we aren't going to have a bottom. Remember, what's happened is that a lot of large funds, a lot of fast money has taken big bets in energy. So we're going to keep seeing swings. But as soon as the weather gets cold, we are going to see oil go right back up to $60 a barrel.
Well, a number of traders in the futures pits feel that a cold snap up north, even now, is so late it won't have that much of a positive effect on prices for oil.
Oh, I think it will, because you're going to have the bottom fishers that are going to come back in and they're going to start buying. Remember, the market has very, very short memory. Okay, so as soon as, oh, this is cheap, oil prices are going up, they're going to run these stocks back up. Again, 2007 is going to be the year of consolidation, but it's also going to be the year of volatility.
Okay, you've mentioned a number of takeover targets, but of the big consolidated oils, which are your favorites?
I like ExxonMobil still to this day, although I will say it's richly priced. No one should think that the pullback in price is some big buying opportunity. If you take a look at ExxonMobil over 5 years, this is just a small blip, but it's a great stock for the portfolio. The ones that are a little more charged up are going to be companies like ConocoPhillips and BP. BP, which is half the market cap of ExxonMobil, so it has some upside going. And of course, the other ones that are large are companies like PetroChina, PTR, which will probably list on the Shanghai Exchange, its own hometown, and therefore we're going to see, again, some upside because we're looking for some stock price increase.
Hillary, do you own any of the stocks or have other disclosure to make?
Not these.
I want to thank you for being with us once again, and I look forward to your next visit on January 24th. My guest, Hillary Kramer of AOL.
Tomorrow, for the president of Venezuela, why oil may be a curse as well as a blessing. In the Money File tonight, it might be convenient to swipe your credit card next time you go to the drive-thru at that fast food place, but it might also be expensive. Here's Chuck Jaffe, senior columnist at Market Watch.
Americans put an estimated $51 billion worth of fast food on their credit and debit cards last year, about 30 times more than they spent on plastic back in 2000. That means that about 30% of all the money spent in quick service restaurants is now on cards. The increase has more to do with fast food merchants accepting credit cards than it does with consumers going out to eat more often. But if you think fast food is dangerous for your health, consider how, purchased on credit, it could be hazardous to your wealth. Fast food retailers know that consumers spend more when they use plastic to buy it. According to the most recent data from Visa, the average fast food credit ticket is $11.15. What the statistics don't say is just what percentage of plastic use is adding to America's growing consumer credit burden. With the average household credit debt standing at around $9,000, the last thing most people need to do is add Big Macs, Whoppers, and Frosties to the list of things that will take them years to pay off. An $11.15 fast food bill that lingers on a credit card accruing interest at 14.9% per year will represent $25 worth of debt after 7 years. And don't kid yourself. You may pay off the $11.15 on the next bill, but unless you increase your overall monthly payment, you're still carrying extra debt. Convenience is great if you can afford it, but it's not a value meal if you're still paying for your French fries 5 years from now. I'm Chuck Jaffe.
Recapping today's market action, stocks gained some ground. The Dow closed up 25 points, the Nasdaq up 15.5. To learn more about the stories in tonight's broadcast, go to Nightly Business Report on pbs.org. You can also email us at nbr@pbs.org.
And that's Nightly Business Report for Wednesday, January 10th. I'm Susie Garib. Good night, everyone. And good night to you, Paul.
Good night, Susie. I'm Paul Kangas, wishing all of you the best of goodbye.
Nightly Business Report is made possible by
Franklin Templeton Investments. Our unique perspective helps us see domestic and international markets in a different light. Franklin Templeton Investments. Gain from our perspective.
And by A.G. Edwards.
This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Missing your favorite OPB programs? Log on to opb.org/on-demand to learn how to schedule OPB television on your time.
Arthritis pain? Activon. Apply directly where it hurts. Activon Arthritis. In stores now.
I'd like to tell you what OsteoBiflex has done for me.
OsteoBiflex, the #1 doctor-recommended joint care brand.
OsteoBiflex has lubricated all my joints, my shoulders, my neck, my back, my knees.
The glucosamine and chondroitin, as found in OsteoBiflex, actually lubricates and cushions your joints.
OsteoBiflex works.
For a $3 off coupon and more information on OsteoBiflex, go to osteobiflex.com right now.